As a crypto trader or crypto millionaires, should you consider an LLC to avoid tax burden and assets protection? Hey, crypto enthusiasts and future millionaires! Today, we're diving into a topic that could be a total game changer for your crypto investments. We're talking about setting up an LLC or trust before a crypto liquidity event. Now, I know what you're thinking. Whoa, that sounds complicated. But don't worry, I've got your back. We're going to break this down into bite-sized pieces that even your grandma could understand. No offense, Grandma. But before we get into the nitty-gritty, if you're new here, make sure to smash that subscribe button and hit the bell icon. Trust me, you don't want to miss out on our weekly business tips that could potentially make you the next crypto millionaire. All right, let's dive in. So you've been hodling your favorite crypto for years. You've weathered the storms, resisted the urge to panic sell, and now, boom, the price skyrockets and you're sitting on a gold mine. Exciting, right? But here's the million-dollar question, quite literally. Are you prepared for this possible financial windfall? That's where LLCs and trusts come in. They're like your crypto bodyguards protecting your digital wealth and potentially saving you a fortune in taxes. But hey, I get it. The thought of setting up a legal entity might make you want to run for the hills. That's why we're here today to demystify this process and show you why it could be the smartest move you'll ever make for your crypto investments. So let's start with the basics. What exactly is an LLC? In short, LLC stands for Limited Liability Company. It's a business structure that combines the pass-through taxation of a partnership or sole proprietorship with the limited liability of a corporation. In other words, it's like a shield for your personal assets. Now, you might be wondering, can LLCs even own cryptocurrency? The answer is a resounding yes. In fact, many savvy crypto investors are using LLCs to hold their digital assets. It's like giving your crypto its own home, separate from your personal finances. But why bother with all this legal mumbo-jumbo? Well, my friend, the benefits are pretty sweet. First off, an LLC can provide asset protection. If someone decides to sue you personally, your crypto assets held in the LLC could be off limits. It's like putting your crypto in a fortress, safe and secure. Secondly, LLCs can offer some nifty tax advantages. Depending on how you structure it, an LLC can help you write off expenses related to your crypto activities. Think about it. That new high-powered computer you bought for mining? That could be a business expense. The electricity costs for running your mining rig? Yep, that too. Now I know what some of you are thinking. But I'm not a business, I'm just an individual investor. Here's the thing. By treating your crypto investments as a business, you're opening up a world of opportunities. You're no longer just a hodler, you're a crypto entrepreneur. But wait, there's more. I've always wanted to say that. Setting up an LLC for your crypto investments can also help with privacy. In some states like Wyoming, you can set up an anonymous LLC. This means your personal information isn't publicly linked to the company. It's like wearing a mask for your crypto holdings, very ninja-like. Now let's talk about trusts. A trust is another option for holding your crypto assets, especially if you're sitting on a potential fortune. Trusts can be particularly useful for estate planning and potentially reducing your tax burden. Here's where things get interesting. In the US, there's something called the gift tax exemption. As of 2023, you can gift up to $12 to $92 million in your lifetime, or $25.84 million for married couples without paying gift tax. Why does this matter? Well, if you're expecting your crypto holdings to balloon beyond these amounts, setting up a trust before your crypto moons could save you a ton in taxes. Real quick, just imagine this scenario. You've got a bunch of XRP and you think it's going to explode in value. If you wait until after it skyrockets to set up a trust, you might be hit with a hefty gift tax when you transfer those assets. But if you set up the trust and transfer the assets before the big price jump, you could potentially save millions in taxes. It's like time traveling for your finances. Now, I know what you're thinking. This all sounds great, but how do I actually set this up? Don't worry, I've got you covered. Let's walk through the process step by step. Step 1, decide on LLC or trust. First, you need to decide whether an LLC or trust is right for you. This depends on your specific situation, including the value of your crypto holdings, your long-term goals, and your tax situation. If you're not sure, it's always a good idea to consult with a crypto-friendly attorney or tax professional. Step 2, choose your state. If you're going with an LLC, you'll need to choose which state to form it in. Some states, like Wyoming, are particularly crypto-friendly. They have clear laws about digital assets and offer strong privacy protections. Step 3, file the paperwork. Once you've decided on your structure and state, it's time to file the paperwork. For an LLC, this typically involves filing articles of organization with the state. For a trust, you'll need to create a trust document. Step 4, get an IN. If you're setting up an LLC, you'll need to get an Employer Identification Number, EIN, from the IRS. Don't worry, it's free and you can do it online. Step 5, create an operating agreement. For an LLC, you'll want to create an operating agreement. This document outlines how your LLC will be run. For a trust, the trust document serves a similar purpose. Step 6, open a bank account. You'll want to open a separate bank account for your LLC or trust. This helps keep your crypto activities separate from your personal finances. Step 7, transfer your assets. Finally, you'll transfer your crypto assets into an LLC or trust. This is where you'll want to be extra careful and possibly get professional help to ensure it's done correctly. Now, I know that might seem like a lot of steps, but trust me, it's worth it. It's like building a fortress for your crypto wealth. And here's a pro tip. We recommend using Northwest Registered Agent to form your LLC. They can handle the paperwork for you for just $39 plus state fees. How's that for a deal? Check out the link in the description below to learn more. But hey, what if you've already been trading crypto for years? Can you still benefit from setting up an LLC? Absolutely. While you can't go back retroactively to harvest tax losses, moving forward with an LLC can still provide significant benefits. Now let's address the elephant in the room: taxes. How are LLCs taxed when it comes to crypto? Well, it depends on how you structure your LLC. By default, a single-member LLC is treated as a disregarded entity for tax purposes, which means it's taxed just like a sole proprietorship. But you can also elect to have your LLC taxed as a corporation, which might offer some advantages depending on your situation. One of the big benefits of an LLC is the potential to write off expenses related to your crypto activities. This could include things like the cost of your hardware wallet, subscription fees for crypto research services, a portion of your internet and electricity costs if you're mining, the cost of attending crypto conferences. Hello, Vegas. But remember, with great power comes great responsibility. If you're going to claim these deductions, you need to keep meticulous records. The IRS isn't known for its sense of humor when it comes to taxes. Now you might be wondering, is there a downside to all this? Well, setting up and maintaining an LLC or trust does involve some costs and paperwork. You'll need to file annual reports, keep good records, and possibly pay annual fees to the state. But for many crypto investors, the benefits far outweigh these minor hassles. Here's another thing to consider. What if your crypto investments really take off? Like to the moon and beyond? This is where trust might come in handy, especially for estate planning purposes. A properly structured trust can help ensure that your crypto wealth is passed on to your heirs efficiently, potentially saving them a bundle in estate taxes. But wait, there's even more. I really like saying that. Setting up an LLC or trust isn't just about protecting your assets and saving on taxes. It's also about professionalizing your crypto activities. When you have a legal entity, it's easier to open accounts with exchanges, work with vendors, and even raise capital if you decide to expand your crypto ventures. Now, I know we've covered a lot of ground here, and your head might be spinning faster than a Bitcoin mining rig. But don't worry, you don't have to figure all this out on your own. In fact, I strongly recommend working with professionals who understand both crypto and business structures. A good crypto-friendly attorney and accountant can be worth their weight in Bitcoin. Remember, the key is to be proactive. Don't wait until after your crypto moons to start thinking about these structures. The time to prepare is now while your coins are still earthbound. All right, crypto fam, that's all for today's video. I hope you found this information helpful and maybe even a little exciting. After all, planning for massive crypto gains is pretty thrilling, right? If you enjoyed this video and want to see more content like this, you know what to do. Smash that like button, hit subscribe if you haven't already. And don't forget to ring that bell so you never miss an upload. And hey, if you have any questions or experiences with setting up LLCs or trusts for crypto, drop them in the comments below. I love hearing from you guys. Until next time, stay savvy, keep trading, and hodl on.